Welcome back to Success with Steven. My name is Steven Smith. On this channel, we discuss all things financial literacy. Recently, I did a one-on-one coaching and I was asked, Steven, if I wanted to get a 700 credit score in 1 week, how would I do it? And my response was, of course, like, that's tough. It's improbable, but it's not impossible. So today, I'm going to share with you a 7-day strategic plan that you can implement to take your credit score from a poor rating, let's say 500, to a 700 in just 1 week. I know the feeling of being denied when applying for a car loan or a personal loan, or even something as simple as a new credit card. It feels like having a door slammed in your face, all because you have a low credit score. But here's the truth. Your credit isn't a life sentence. I managed to rebuild mine. I took it from a 400 to over 800 at one point. And today I'm going to show you exactly how I did it and how you can do it too. And let's see if we can do this within 1 week. So without further ado, let's get right into the video. Starting with day one on, let's say, a Sunday, the very first step in turning things around is understanding where you currently stand. If you don't know what's wrong with your credit report, then you don't know exactly what you can do to fix it. Your credit report is your financial reputation on paper. It contains your payment history, outstanding balances, account status, and other factors that lenders will use to evaluate your trustworthiness. Even something as small as an incorrect balance can chip away at your score. So we're going to start by visiting annualcreditreport.com. This is the official website where you can pull your report from the 3 major credit bureaus, Experian, TransUnion, and Equifax. And thanks to recent changes, you're now allowed to check these reports every week for free. That's a huge advantage when you're actively working on improving your credit. Just fill out the form, select which report you want to review, and you'll have full access to that within minutes. Once you have your reports in front of you, it's time to identify the items that are hurting your credit score. Late payments, collections, charge-offs, bankruptcies, all of these things can drag your score down faster than anything else. Surprisingly, credit reports have many common errors and probably more than you think. A 2024 study by Consumer Reports revealed that almost half of those who checked their credit report found at least one mistake, and 27% found errors that could negatively impact their credit score. Another study by American Bankruptcy Institute, AB, suggests as many as 42 million Americans may have errors on their reports, which is about 13% of the entire population. Start by verifying your personal information. Check your name, your address, phone numbers that need to be updated or corrected. If you have multiple addresses and employers and even multiple phone numbers, this might seem harmless, but they can make you look unstable to lenders. You want to remove old addresses that you don't need. I would remove old phone numbers and all numbers in general, to be honest. I would also remove employer information if you don't need it. Then check the status of your accounts. Look out for accounts that are marked as open, but they're actually closed, payments that show up as late even though you paid them on time, debts that appear more than once under different account names. You then want to examine your balances, your credit limits. These numbers directly affect your credit utilization, which plays a major role in your credit score. An incorrect limit or an outdated balance can unfairly bring down your score. The last thing I need you to do is make sure you have an active account with all 3 major bureaus, Experian, TransUnion, and Equifax. All of them will provide you with a free account where you have access to dispute, freeze, unfreeze your credit report, monitor things, and many other options. This will be important in the days ahead. Day 2, on Monday, we'll begin by disputing all the inaccuracies and derogatory information that we found. Under the Fair Credit Reporting Act, the FCRA, you have the legal right to dispute inaccurate or incomplete information, and you can file a dispute with the credit bureaus by providing identification documents and submitting them through various ways, such as the CFPB, the BBB, or even the post office. Once your dispute is submitted, the bureaus have 30 days to investigate. If they can't verify the information, it must be removed, and one change could mean the difference between a huge interest rate and an affordable monthly payment. And I know we're trying to get all this done in 1 week, so check the description. I have a credit repair playlist that has many videos on how you can repair your credit and dispute these accounts, and people have seen results in as fast as 1 week. Persistence here is key. Credit bureaus often will deny updates or disputes for many reasons, but don't let that stop you. Keep a record of everything: emails, letters, if you call, anything like that. Track which items you disputed and follow up. While I was starting out, the process for me felt like it was never ending, but staying organized really helped me see steady results. Once again, I have many videos in regards to this topic, and I'm sure that you will see several improvements. On Tuesday, day 3, we're gonna focus on reducing your credit utilization. If there's one thing that can boost your score fast, it's lowering credit utilization. This ratio will measure how much of your total available credit you're actually using. Higher utilization will lead banks to believe that you may be over leveraged and that you're relying on credit too much, and this will make you look very risky. Let's say you have a $10,000 available credit line and you have $3,000 of that credit line being used. That's 30% utilization. The goal is to keep it under 30%, but for the best results, you want to be below 10%. Anything under 6% is going to maximize this factor of your credit score overall. Now, here's a couple of different ways to lower your utilization. Number one, of course, is just pay down your balances. Now, depending on how much you have, that may be difficult, but it's the most obvious option. Pay down as much as possible. You can either use the snowball method, where you pay off the smallest balances first, or the avalanche method, targeting the highest interest rate debts, but you can pick whichever method you would prefer. Either one will give you the exact same results. The next thing that you can do is time your payment strategically. Now, let's say you don't have a balance, but you don't really understand how utilization works. Most people pay on their due date, which helps them avoid late fees, but it doesn't do much for your credit score per se, and I'll explain. After you pay your balance in full on the due date, you only want to leave a small balance before your statement closing date. This small balance will be due next month, so don't worry, it's not going to be late. But this balance gets captured like a snapshot and is reported to the credit bureaus. If you can't pay the balance off in full before the statement closes, try making multiple payments throughout the month, weekly or bi-weekly payments, to keep the balance low and easier for you to manage. So remember, when your statement cycle date closes, whatever balance is left at that time will get reported to the credit bureaus. And if the balance is high in relation to your credit limit, it will lower your score. If the balance is low, like 10% or even 6%, then your credit score will actually remain high. Another option is requesting a credit limit increase. For example, if you have a $3,000 balance on a $10,000 card, your utilization is 30%. But if your limit is bumped up to $15,000, the same $3,000 just becomes 20%. So you don't have to actually change anything that you're doing. Just by increasing that limit will help with your utilization. Some issuers use soft inquiries for credit limit increases. Some do hard pulls, so always ask before requesting. Another option is consider consolidating debt with a personal loan. Credit card debt is revolving, which counts against your utilization. A personal loan is an installment where it's treated differently. It's not weighted as heavily on your credit score. You'll often get lower interest rates too than credit cards if you're carrying a balance. So when it makes sense, you might want to consider this option. Lastly, if you have a business credit card, you may also want to consider doing a balance transfer. Normally, business credit cards don't show up on your personal credit, so if you move the balance over, you can reap the benefits of having a higher credit score while also paying off the debt on that business credit card. And sometimes these will also offer 0% APR, so you can actually save money, especially if you were carrying a balance that was accruing interest. On Wednesday, day 4, we're going to take a look at some credit builder accounts and some secured loan options. These are two powerful tools that can help increase your credit score relatively quick. For example, the Ava Credit Builder states directly on its website that Ava members see a credit score improvement in less than 7 days by creating a consistent positive payment history and improving your credit mix types on your credit report. This is very possible, and I've seen it happen countless times. So people use these things like Credit Strong or Navy Federal Pledge loans, things like that. There are many options at your disposal. If you're just starting out with no credit or you're trying to bounce back from past mistakes, these tools provide a structured, low-risk way to show lenders that you can be trusted with credit. However, I will warn you, do not solely rely on credit builders. You still need primary accounts from traditional banks and credit unions. There are more than 16 credit scoring models to date. Depending on the model being used, they may look at credit builders as commercial accounts. And yes, while they might raise your credit score, they will not look good for a credit profile when you're trying to get other things like business funding or a mortgage. So for example, if you had the Ava credit builder, then I recommend maybe getting a secured credit card from the bank of your choice. Or if you have, let's say, the pledge loan with Navy Federal, maybe consider getting the Navy Federal secured credit card. Something like that will be very beneficial for you. If you're interested, I have many reviews on different types of products that are used for credit building. Again, it's in the credit repair playlist. I also have links in the description if you want to sign up for any credit builders that I talk about in those reviews. On Thursday, day 5, we're going to take a look at boosting your credit score with authorized user trade lines. So sometimes everyone needs a little push. That's where authorized users come in. Being added to someone else's well-managed credit card account can inject years of good history into your profile. I talked about this before in several videos. The main one being a video that I have about getting a car with no down payment, even with having bad credit. My own personal experience, my mom added me on as an authorized user to one of her credit cards. When she did that, it gave me a credit score boost that allowed me to get into a vehicle even though my credit was bad. Later on, I was able to eventually pay that vehicle off, and with better credit, I was able to get a better interest rate going forward. So it is something that you can do, but I recommend that if you have someone that you trust, like a relative, a spouse, a close friend, and they have a good credit card account with a high credit limit and good history of on-time payments, you might want to consider asking them to be added on as an authorized user. But if you can't do that, there's also an alternative. You can actually purchase trade lines to be added onto. They normally last about 2 to 3 months, and then they remove you. In that video, I talk about things like Trade Line Supply Co. and Coastal Trade Lines. So it would be a temporary boost for you to possibly get like a vehicle just long enough to apply for some type of product that you're looking for. But if we're looking for long-term success and keeping our credit score high, it really does help if you have a close friend or someone that you trust to do this for you instead. The account holder doesn't have to let you use the card or even give you the account number for your credit to improve. Just make sure the account reports to all 3 major credit bureaus to get the best effect. Most credit cards do, but some don't, so you just want to make sure that you double check that. Trade lines are one of the most effective ways to increase your credit score, but if your report is packed with, let's say, like delinquencies or derogatory marks, the impact will still be limited. But if your profile is just thin and you need a boost, it can make a huge difference. So I just want to be clear that just adding on authorized user trade lines is not some way to magically increase your score. Derogatory marks will still get you denied for almost everything. You need absolutely 0 derogatory marks in order to get the best approvals. On Friday, I want you to take a look at one more thing. We're looking at lease reporting services for rent payments. Most landlords don't report your on-time rent payments to the credit bureaus, but they can. If you use a service like Rent Reporters, which will go back up to 24 months, since rent is usually your biggest monthly expense, having it show up as a consistent on-time installment can give your credit file the boost of a long-standing, well-managed account. Again, 24 months of payment history is huge. That will greatly increase your credit score. 35% of your overall score, in fact, is made up of on-time payment history. That is the largest factor. Adding this type of account alone will drastically improve your credit score. According to Rent Reporter's website, your rental trade line will be added to your credit report within 5 to 7 days. As you continue to pay your rent each month, additional positive payment history is added to the trade line monthly. On Saturday, which is day 7, it's now time for us to review each day what we implemented and what's actually making up the factors of our credit score. Now, if you guys have been watching this channel for a while, you've probably seen me talk about this a few different times, but this is your FICO score breakdown. Almost all lenders will use a FICO scoring model in order to approve you for most products and services when it comes to credit. That's why it is the most important scoring model. Payment history, which is 35%. We touched on that with Rent Reporters. We also did it if you're added on as an authorized user, if that's applicable, so check. We also have 30% for utilization. We talked about the various ways to get that down below 30, 10, or even 6%, which is the most ideal. So we have that checked off too. Next, we have length of credit history. Rent reporters will kind of help with that, as well as the authorized user account. So that was a double whammy there. We also have credit mix. If we use credit builders, then we can have a mix of installment, some revolving accounts, things like that, as well as rent reporter counting as an installment, authorized user account counting as a revolving, like a credit card. So we touched that again. And the new credit would be any new account that we also added to our credit report. So we pretty much touched every single factor of our score to potentially maximize every single factor. Now, the last thing that I recommend that you do is follow up on any disputes. Normally, with the methods that I use, in 1 week, you should have an update on any of your disputes. So if we got some collections removed, hard inquiries removed, maybe even charge-offs, we might see our score drastically improve from that. Now, I do want you guys to understand this process does take time, but every single step will bring you closer to having better credit, more financial freedom, and lower interest rates. So I highly recommend that you just stick to the process. But if I had to do a crash course in 7 days, this is everything that I would do to get my credit score up to the high 700 range. So there you have it, guys. That is your 7-day action plan. If you would like more actionable steps that you can take to increase your credit score, please let me know in the comments below. I'd be more than happy to make other content that's close to this. If you guys have implemented any of these tips, please, again, let me know in the comments. I would love to hear how they work for you. And if you have any additional questions, comment that as well. Once again, thank you for watching, and you have a wonderful day.